So I've used the term self-directed a couple times so far. Let's define that. A self-directed retirement account is a retirement account that allows you to invest your existing retirement account funds into private assets, like real estate, tax-free and penalty-free.
If you want to sell your house very fast for cash, then HouseCashin gets the cash flowing.
So instead of taking your 401k funds out of the plan, paying taxes, and paying penalties, a self-directed 401k allows for you to use the entire balance towards purchases of physical real estate. Now remember, if you call Fidelity and Charles Schwab, they're going to say no. You've got to take the dollars out, pay those taxes and penalties. The alternative is self-directed plans. That's what we help with. Many types of existing retirement plans will qualify for a rollover to a self-directed plan. That includes 401ks, 403bs, TSPs, 457s, Roth IRAs, traditional IRAs, SEP IRAs, the list goes on. Any account that is considered tax deferred would qualify to be converted to a self-directed plan. Now, in the self-directed world, there's a special type of account that we refer to as a checkbook 401k or checkbook IRA. This essentially allows for you to manage your retirement investments through the control of a business checking account. So picture this. You have a balance in your current retirement account plan. We can essentially help you move those dollars into a business checking account with an institution of your choosing so that you have direct access to your funds. That way, when an investment property comes along that you want to pounce on, you can physically write the check yourself for an earnest money deposit or send a wire online, depending what your bank's going to allow for you to do. All of that done tax deferred, tax free, and penalty free.
If you want to sell your house very fast for cash, then HouseCashin gets the cash